Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, September 10th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. As we look at the week that was, we have a week that really you could put a big X across the effect on the economic announcements. A 4-day trading week, and nothing really great came out of it as far as strong surprises to the announcements. Looking at the week that's going to come, we see very little taking place on Monday, very little taking place on Tuesday, and as we come to Wednesday, that's when it begins. FOMC meeting begins on Wednesday. That certainly is capable of moving the market. Import and export prices are also on Wednesday. Looking at Thursday, we have our perpetual jobless claims at 8:30, and then PPI to tell us about the previous month that just took place. At 12:30, we have that all-important FOMC meeting. Expectations for that FOMC meeting are that they want to hear, Wall Street wants to hear something of easing, wants to hear something of QE3. Personal opinion, probably not going to hear it. Why on earth would they want to influence the election at this point, and they know that. So very unlikely that we'll see or hear much coming out of the FOMC week this time. Probably won't hear much until December when the election is over and done. Then when we come on to Friday, oh yes, CPI, last month's reports, that'll be big. Retail sales, yes. Industrial production, sort of. Consumer sentiment, huge. Business inventories, yes, that's part of what's going on. So we certainly have enough economic announcements this week to move the market any way they want to move it, and a good excuse to do so. Looking at the market for the last 3 months, you see we are definitely in an uptrend. And finally on Thursday, we went back up into that up cycle. Could you say too far, too fast? You could. Will it keep going? It could. What is the next target? 1440. All right, will it get there? We shall see. Looking at the week that was, we were on a down cycle the first 3 days, and then bingo, Thursday. Too far, too fast, but a continuation of that up cycle. Let's take a look at this in a little bit more detail, looking at a larger chart of what we had. On Monday, what we saw was that the stocks got off to a strong start before stumbling slightly when Federal Reserve Chairman Ben Bernanke did not come out with much news about easing, instead reaffirmed his commitment to act if economic conditions worsened. On Tuesday, we see that stocks are kind of opened up, changed, opening basically where they closed, and we see that they fell into red after the economic data missed some of its expectations and the down cycle continued. On Wednesday, we ended up with a inside day, which we can't say that we had a change in cycle, so that on Wednesday it basically spent most of its time in a narrow range around that unchanged line. And then finally on Thursday, equities began moving higher. We went into an up cycle, and we moved big, we moved fast, and it couldn't have moved any faster than it moved on Thursday. The bullish sentiment was sparked after Mario Draghi confirmed Thursday's reports of a European Central Bank that they were willing to buy bonds of troubled countries who would ask for aid. So this caused the market to move, one might say, too far, too fast. All right, should we get a pullback on Friday? Well, on Friday, we basically got off to a mixed start, didn't have a big day up, kind of a small range day, but nonetheless still continuing our upward cycle. So as a week, it was up for the week, and we'll see that when we look at our overall moves in the market. All right, next let's take a look and see what the Dow did under the same circumstances. And by the way, take a look at the SPX, and can you say that we had a breakout? Yes, we went on to new highs. Let's take a look at the Dow, and you'll see that we're still in the same trading range for the Dow, have not broken out on the Dow, and have not moved into new highs. All right, let's take a look at the NASDAQ. See that, say breakout on Thursday as we broke up into new highs, and the Dow at 12-year highs. Certainly something to write home about as we are moving up in this great economy. Looking at the Russell 2000, we see that it moved up and moved up strong following the S&P. So new highs coming out of the Russell 2000 also. And so looking at the week that was, looking at the Dow, the NASDAQ, the S&P 500, and the Russell, we see that all of them were in positive numbers. Everything there was in a positive number. And we see the changes were all above 1%, as the Dow went up 1.6%, NASDAQ went up 2.3% for the high of all of those percentage-wise, 2.2% as the S&P followed up very closely. And, I was wrong. The all-time high was 3.7% out of the Russell 2000. Looking at where we've gone for the year, we see that the Dow's up about 9%, NASDAQ up about 20% to give us the highest move for the year, S&P up 14%, and Russell up 13.7%, as it may have had a week that was, but it's still lagging a bit behind the S&P and the NASDAQ. So quite a week in the market as we saw new highs taking place in the S&P, the highest S&P we have seen in 2 years, and the NASDAQ highest we've seen in, go back 12 years. Pretty impressive. Looking at the VIX as the market went up, look at the fear come out of the market as the market went up. We saw the VIX pull back into that 14-point range, and so headed back to those previous lows of around 13.5. All right, let's see where the VIX finally bottoms out and turns around. By the way, you can certainly trade the VIX. There are ETFs to trade it. There are a number of different ways to trade it. You can trade it with options, and it will follow the pattern of the overall market, so it certainly provides for you some opportunities to do that. Let's take a look at some of the ETFs, looking at some of the sectors, looking at TLT, which is our bond sector, and we see that as the market went up, which way did the bonds go? They went down. No big surprise, following what we would consider to be normal trends. So remember, you kind of have an inverse relationship between bonds and the overall market. Next, let's take a look at the financials. We would expect financials to go up with the overall market. We got new highs for the year out of the financials as we have a, what one might call a breakout on volume. Pretty impressive as we go into this month of September, a month that is famous for its damage that it does to people's overall portfolios. So be careful in September as to watching for that big pullback. All right, now let's take a look at oil, and we see oil basically has gone sideways. No big moves up in USO, which is our ETF, giving us an indication of what oil is doing. So no breakout in oil. And finally, let's take a look at that gold ETF, GLD, and look at what happened. A flight to safety. All right, what does that tell you? As it has reached a pretty high level in gold. So some of the money looks like it may be very well leaving the market as the demand for gold has definitely gone up. All right, with that thought, that is the ETFs and the sectors. Let's see what kind of volume we had on our breakout. There's our Thursday breakout, and there's the volume that came with that breakout. Pretty impressive volume. Some of the higher volume for the month. Certainly not higher volume that we've had for the year, but the breakout certainly took place with some volume. A big week to come as we expect a lot of economic announcements, big news coming out of Bernanke, or lack of news, and the effect will it have on our market will make this a very interesting week in the market. And for those of you that are gold members, stick around for our stocks to watch. We'll see what happens with these as the overall market had what we call a breakout. So with that thought in mind, ladies and gentlemen, thank you for being here. This is Butch Shorak, Options University, Monday, September 10th, 2012. And for those of you that are interested in other free videos, go to www.optionsuniversity.com/free gold. Thank you, folks. Have a great week. Trade what you see, not what you think.